Part 4A, let's briefly read through the requirement again. Provide all the journal entries for the year ended 31 December 2019 relating to the share-based payment arrangements in accordance with IFRS. Journal narrations are not required and round off all calculated amounts to your nearest rand. Right. Okay guys, now as always, I prefer to have some kind of structure, steps that I can use. I prefer to include my table. Now remember, my table will consist out of my years, my number of employees, the options, the vesting period, my fair value, and my share-based payment reserve, and my profit or loss. This is included in your IFRS 2 revision notes. Then briefly again, a small timeline. Remember, this is for myself. This is part of my workings. Why? Because when you look at the scenario, they've provided us with a grant date on 1 July. Therefore, I don't want to miss that 6 month period in the beginning. Then I will perform my calculations by working from the details from the top. I will complete my journal entries as I need to answer the question. Therefore, on a new page, as always, indicate that this is your part 4A. I've already included my table to save us some recording time. I have identified, guys, on my timeline, my grant date is 1 July 2017. We need to prepare the journal entries for 31 December 2019. Therefore, this is important. This is why I include my timeline, to ensure that I understand the flow of my transactions. When I look at this, my first section will be 6 months. Then for 2018, 12 months and another 12 months. Now I'm able to complete my table. I've included my year 1, year 2 and year 3. I need to obtain my number of employees from the given scenario. Now, we will remember that when we've read through this, they've indicated to us that our number of employees is 3,800, right? Therefore, we can include this, that we have 3,800 employees. But then they indicate to us in the scenario on 31 December 2018, they estimate that 93% will still be within employment. Remember, at 31 December 2018, therefore, if I include my employees now for 2018, this will be the 3,800 times the 93%. Therefore, this will be an amount of 3,534. Right. Then they indicate to us in the next sentence that 550 of the employees were retrenched at the end of 31 December 2019. Therefore, this is an early cancellation that we need to identify. This will be an accelerated vesting. Therefore, the remaining amount, guys, included in our share-based payment reserve, we will have to take out. We will debit our share-based payment reserve. And then on this date, they estimate that 77% of the employees will be in service. Therefore, if we now need to calculate my employees, how do we do this? Okay, for 2019 at year end, remember initially we had the 3,800 minus the 550, and that balance we will 3,250 times 77%, and this will be an amount of 2,503. And we need to include that there's that cancellation of the 550 employees to remember. The number of options they've indicated to us in the first paragraph, guys. The number of options is 150 share options. Therefore, we can include those. It's our 150, 150, 150 and the 150. The period we have identified to be 4 years. But it is important when you look at our timeline, if we are standing at the end of December 2017, 6 months has passed. Therefore, this will be 6 over 48. Remember, the 48 will be the 4 years times 12, and this will be 48. 20.18, we will have a total of 18 months that has passed. Therefore, 18 times 48. And then at the end of 2019, we will have 6 plus 12 plus 12. And this will be a total of 30 out of the 48. You with me? But for the cancellation, accelerated vesting, we will have to use the 48 over the 48. The fair value is at grant date. Now we have identified during our reading time that we need to use the 6 rand as our fair value. Therefore, this will be 6 rand, 6 rand, 6 rand, and 6 rand. And we can now include our share-based payment reserve amounts. Right, you guys, listen and listen carefully. Remember, we need to prepare the journal entries at year end. Therefore, what should the share-based payment reserve be at year end? And this will be before the 550 employees cancelled. Okay? Before the 550 employees cancelled, our share-based payment will be the total of this 495,000 plus the 140,937. Therefore, this is an amount of 140,937. This will be an amount of 190,238. You with me? Okay. Therefore, the movement from the 119,275, if you include this on your timeline, 119,275 to an amount of 190,238. Guys, this movement will be an amount of 710,213. Therefore, our share-based payment reserve will increase with this amount, right? Therefore, our journal entry will be to debit our employee costs in our profit and loss, to credit our share-based payment reserve in our statement of changes in equity with a 710,213, 710,213. Remember, please, you may not use abbreviations. You need to write this out. Okay, now we have the 550 employees that resigned. Okay, so you with me? Included in this 190,238 is 495,000. Therefore, we will have to take this out. We will have to debit our share-based payment reserve statement of changes in equity with the 495,000. We need to take this out. Accelerated vesting. This means as if they have completed the vesting. Look at my period, 48 over 48. You with me on this? And then they've indicated to us a payment in the scenario. Therefore, we will have to credit our bank account statement of financial position. We know that this will be 550 employees times 150 options times a price. They've indicated to us that they pay them 18 Rand per option. Therefore, times 18 Rand, this is the payment amount. And we have a total payment of 148,500. Now, guys, we need to identify that this payment of 18 Rand exceeds the fair value of our shares at this date. The fair value of our shares is this 10 Rand 50. Therefore, we need to recognize that difference, the 18 Rand minus the 10 Rand 50, to our employee costs. Therefore, 18 Rand minus 10 Rand 50. Remember, this is what they've paid. This is what the value is. Times 150 times the 550 employees. And this will be 618,750. Therefore, debit our employee costs, profit and loss, 618,750. And we need to debit our retained earnings with the balancing figure. Right? And this will be 371,250. Okay. So I just quickly want to indicate this to you guys. If you look at the amount in terms of the retained earnings, you will remember that we have our fair value at grant date 6 Rand. The fair value at cancellation date is this 10 Rand 50. Our 550 employees times the 150 options. Therefore, the difference of this 4 Rand 50 will be recognized to our retained earnings. Now, if you think about this, we have only recognized in the prior years the values up until 6 Rand. Okay? But if we had to use this fair value, because this will be the fair value on cancellation date, guys, then we had to include this additional 4 Rand 50 in our employee costs in our prior year. Therefore, if this were included in your employee costs, this is an expense. This will decrease your profit, therefore decrease your retained earnings.